We are nearing the end of 2025. So you know what that means. Let's start talking about what the experts are predicting for the housing market in 2026. And I will tell you, it's looking a lot more positive than it has in the past couple of years. My friends, we are finally approaching a balanced market. So let's get into it right now. I can't believe it's the end of the year and we're already here. We got to talk about what's going to happen in 2026. I'm going to share with you what the experts are predicting as far as the mortgage rates. And I also have an article from Narada Real Estate Investments that tells us what their thoughts are regarding home sales and home prices. So let's dive in. So as many of you know, Jerome Powell just announced another rate cut of 25 basis points to the federal funds rate. However, mortgage rates are still hovering around the same 6.3, 6.4%. It really hasn't had an impact on the mortgage interest rates since he made that announcement. I want to share with you what these experts are saying as far as where we should expect the mortgage interest rates to land in 2026. First on deck is the National Association of Home Builders. They're predicting that the 30-year fixed rate is going to end 2026 at around 6.25%. In his analysis of key data from the September macroeconomic outlook, Eric Lynch, who's the economist of the NAHB, offered this prediction. NAHB is forecasting that the 30-year mortgage rate will continue its downward trajectory, averaging 6.25% by the end of 2026 and around 6% by the end of 2027. National Association of Realtors, they say the rates will stay in the mid 6% range in the months ahead. NAR forecasts that mortgage rates will remain in the mid 6% range in 2025 and possibly decline to 6% in 2026. As we look at possible reductions in the Fed funds rate, we could see a domino effect in the mortgage market, but it's not a one-to-one and it won't necessarily happen overnight, said Jessica Loutz, deputy chief economist at the NAR, in a recent post. Now moving on to Zillow and their home loans division. They say mortgage rates will end 2025 in the mid 6% range. After the Fed cut rate, Kara Eng, senior economist at Zillow Home Loans, reaffirmed Zillow's projection that mortgage rates will finish the year in the mid 6% range. I just have to put this in here. Notice that they don't talk about what's going to happen in 2026 because they made a lot of adjustments to their forecast just this past year. So I see that they're holding back and they're not going to share their predictions just yet. Now, Fannie Mae's forecast is really interesting. They just revised their mortgage rate forecast downward. Per Fannie Mae's September Economic and Housing Outlook, we forecast mortgage rates to end 2025 and 2026 at 6.4% and 5.9% respectively, compared to 6.5% and 6.1% in our prior forecast. The Mortgage Bankers Association, they're predicting the same thing. They feel that the mortgage rates will recede in the coming year. According to the MBA September Mortgage Finance Forecast, the Real Estate Finance Association lowered its average quarterly mortgage rate projections from last month. The Trade Association predicts the 30-year fixed rate mortgage to end the year at 6.5%, down from its previous forecast of 6.6%. The MBA expects an average rate of 6.4% in the first quarter of 2026, down from its previous forecast of 6.5%. Okay, not much of an adjustment, just a little tiny one. Now let's hear what Redfin has to say. Redfin says mortgage rates will remain steady for now. Real estate brokerage Redfin, a subsidiary of Rocket Companies, said in a recent economics report that the Fed signaled 2 more potential cuts before the end of the year. Redfin economists expect mortgage rates to remain steady as markets await further economic data, particularly the next jobs report, which comes out in the start of October. So overall, they're all saying the same thing. They're going to trend downward in 2026. Some are saying they're going to trend down by quite a bit, and some are saying it's going to hover around the same of where we are now, like the mid 6s. I'm going to be honest, Fannie Mae's prediction, that really surprised me that they're saying they could drop below 6%. They're the only ones that are saying that. I'm really curious to see if that comes to fruition. Now let's move on to this report from Narada Real Estate Investments. I thought this was really interesting. Now this report was done by Marco Santarelli. This is not my opinion that I'm sharing here, what I'm reading. This is from Marco Santarelli of Narada Real Estate Investments. So let's see what his thoughts are regarding home prices and home sales. So Marco shares his opinion after reviewing the data from NAR, Zillow, Redfin, all of that. And he says this: after years of scorching hot sales where homes felt like they were disappearing from listings as fast as they appeared, we're starting to see some telltale signs of change. Reports from major players like Fannie Mae, the National Association of Realtors, and data analysts at Zillow are all pointing towards significant pivot by 2026. They suggest that the total number of homes sold in the US could see a healthy jump. Think around a nearly 10% increase from the year before. 10% increase in home sales. Oh my gosh. What's driving this belief? Two main things: mortgage rates that are predicted to ease up a bit, and the inventory of homes for sale slowly but surely growing. Now, I want to be clear, this isn't expected to be a sudden free fall in prices or a market where sellers are desperate. Instead, economists are forecasting a more balanced market. This balance is exactly what buyers have been hoping for. They'll likely have more options to choose from and a better chance to negotiate terms that work for them. It's a stark contrast to just a couple of years ago. We saw mortgage rates that were incredibly low, which combined with the severe lack of homes, supercharged the seller's advantage. Now, as rates are a bit higher, but expected to dip slightly in the coming years, the dynamic starts to shift. Now, what about home prices? So his thoughts on the home prices: it's going to be a steady growth, but not just soaring heights. Will 2026 be the year we see home prices plummet? My professional opinion, based on the data and economic forecast I reviewed, is no. We are not looking at a housing market crash. Instead, we are anticipating much more modest price growth. Think along the lines of 1% to 4% appreciation nationally over the course of a year. This is a far cry from the double digit, sometimes even 15 to 20% surges we witnessed in the peak of the pandemic market. This slower, more sustainable price appreciation is actually a sign of a healthier market. It means that the market is stabilizing rather than overheating. For example, national median home prices might sit somewhere in the $420,000 to $430,000 range by 2026. This is still an increase, but at a pace that is more in line with historical norms and wage growth for many people. Builders are also offering more incentives, and while demand is still present, it's tempered by affordability concerns, which helps keep price growth in check. So he goes on to talk about regional differences. Now, this doesn't mean we're going to see all of this at once throughout the entire country. We've already seen it this year in 25, where the Sun Belt, the southern states, they are already in the buyer's market. In some parts of the country, they're slowly shifting over to become a buyer's market, but it doesn't mean the entire country will become a buyer's market. So this is what he had to say. The Sun Belt is softening. Areas that saw immense price growth during the pandemic, particularly in states like Florida, Texas, and parts of the Southwest, might see more softening. Some forecasts suggest these regions could experience modest price declines or flat growth. This is often due to a combination of increased new construction and a slight cooling of demand as the allure of remote work shifts for some. For buyers in these locales, 2026 could offer genuine opportunities. In the Midwest, he's predicting stability. Conversely, many areas in the Midwest might continue to see steady, albeit slower price appreciation. These markets often have more stable economies and a better balance between supply and demand, making them less prone to dramatic swings. Hotspots exist. Yeah, there's still some hotspots in this country. Don't assume all hot markets will suddenly become buyer paradises. Major hubs with strong economies and limited land for new development, like parts of the Northeast and certain California cities, may continue to experience price growth, though likely at a more controlled pace than in recent years. This I completely agree with. I mean, I sell homes here in northern New Jersey. We are still seeing some pockets, some towns. We still do have some multiple offer situations. It's not as crazy. Prices are not going as high over list. Some are still just selling at list price. I am seeing that totally calming down. But here's my theory. Now, in these hotter markets, meaning that there's very little inventory, there's not enough land to be building homes, such as here in New Jersey, New York, Connecticut, even in Massachusetts, when we have limited inventory and the mortgage rates come down, we're going to be seeing a lot of buyer demand come out. But I don't think you're going to see people wanting to overbid like crazy. I'm working with several buyers right now, and they sure as heck do not want to be overbidding by, $20, $30, $50,000 on a house. They just don't want to do it. People have had it. Okay, so overall, what can we take from this information? Well, if you are a buyer, you're going to be entering the market in 2026. You know what I'm going to say. The first thing you need to do is align yourself with a great realtor. And by the way, if you need to be connected to a realtor in your market, whether you're going to be buying or selling, scan that code, click the link down below, fill out the form, and I will get back to you with an agent in your market. Working with the local realtor is super important because they are the ones that understand what's truly happening in the market, and they will be able to properly guide you. The other advantage you're going to have if you're in these softening markets is you're going to have a lot more negotiation power with regarding asking for seller's concessions, concessions towards closing costs, your inspection repairs, things like that. Now, in the Northeast markets, you still may face some competition, but just keep an eye. Just keep an eye on the market. Have your realtor keep an eye on things. Be prepared. You might have to go up against other buyers, but it doesn't mean you have to go way over asking price or even over asking price. Look at your terms. If you can offer better terms, that might be more attractive to the seller. Now, for those of you who are thinking about selling, I've said it before, I'm going to say it again, get real with your price. Do not list your home, what you paid for, or what the home sold for in the last couple of years. There are some of you out there that did buy in the peak of 21 and 22 that are now turning around and having to sell. Don't expect you're going to get that price right now. I'm being completely honest with you. So if your realtor is telling you, your price is not going to be what you paid for, you're just going to have to deal with that. If you have to sell, that's what's going to have to happen. If that's going to prevent you from selling, I recommend then don't sell the house. If you're just in it to recoup what you paid for, I don't think that's going to happen for you in this market in 2026. So just be real with your price. Listen to your realtor. Do not get greedy. It's not the time to get greedy. So 2026 could be the year of balance. Finally. And I think this is good news for buyers and even for sellers. Those who've been waiting to sell, but have been locked in with the golden handcuffs, they have a lower interest rate. If those rates come down to closer to the 5% range, this could be your time to finally sell that home and go purchase something else, whether you're moving up or downsizing. And if you want to know more about what happened in the housing market this year, I got a whole playlist right here. You can check that out. Thank you so much for watching me today to get your dose of real estate reality. My name is Jackie Baker, and I will see you next time.